Welcome back to the Sean Johnny podcast. Today's show is called Let's Talk About Budgets and the Market Downturn. There's a lot to talk about this month. September has been a rough month in stocks and have nearly finished in the red for 4 weeks in a row, making people wonder, hey, is the stock market crash really happening? And when this type of stuff kind of happens, I typically roll my eyes. I'm also going to be touching on Tesla's battery day that happened on Tuesday, Apple's keynote that happened earlier this month. But today we'll be talking about budgets and how the market is signaling something significant and how we better have a tight budget. So let's begin. In more recent news, Justice Ruth Bader Ginsburg passed away. Ginsburg died at her home in Washington, D.C., surrounded by family. She was 87 years old. Following her death, Trump has selected Amy Coney Barrett to fill Ginsburg's seat on the Supreme Court. So that's pretty significant. I hear a lot of the news that people, I would say on the left, they're like, oh my goodness, how are the Republicans going to fill the seat right before the election? They said 4 years ago that they weren't going to. So I just want to give some little context around that story and just kind of give you guys some data and some history. So 29 times in American history, there has been an open Supreme Court vacancy in the presidential election year or a lame duck year session before the next president, comes in. History does support the Republicans on filling the seat. Doing so would not be in any way be inconsistent, just because of what they did for Justice Anthony Scalia in 2016. The reason for this is kind of simple. Historically, throughout America, when their party controls the Senate, so the Republicans control the Senate, presidents get to fill a Supreme Court vacancy at any time. So, Republicans control the Senate, Republicans control the White House. And this is different from Obama's because Obama didn't have anything. Obama controlled the White House, and at the time, the Republicans controlled both the House and Senate. So, ultimately, they had the ability to block it. And now that the Republicans have the House and have the Senate, they would have the ability to be able to select someone regardless before or after the election, which I don't think it's going to be a big issue regardless. I think, I prefer if they would take their time with their selection and then, since they're going to make the selection regardless, let's do it, after the election, and, you guys can go then proceed with what you were going to do. On more on that in a later date. But the message of today's podcast is that we need a budget. I have some reasons specifically for this message, not just because that budgets help you track your spending and allow you to save money, but I'm shifting my thinking from a good debt is okay to have to let's get good debt and do everything to remove this debt as fast as possible, regardless of the interest rate, the amount, etc. What I'm basically saying is that I feel as though the 2020s are going to be a frugal or an era where we're going to see that too much debt is going to be too much for us, and there's going to be opportunities to buy. And when you have lots of debt, that means you have lots of obligations, and that means your cash flow is restricted. So what is this market and the data telling us? The household data has surpassed levels since their last highs in 2008-2009 during the financial crisis. In the first quarter of 2019, the total U.S. consumer debt hit $14 trillion, reaching or surpassing $13 trillion in 2008. So, in a short span of 10 years, a little over 10 years, you'll see it in the graph that we decreased. We hit our high of 13 trillion, then the market crashed, then we reduced our debt, then after we made the regulations and everything, the market started turning back around, we started raising our debts once again, and now we've hit and surpassed what caused us trouble in 2008, now at $14 trillion. Financial markets tend to adjust, create new regulations to be able to see a trend and recover the market. Then after that, we start to relax, talk about what happened 12 years ago, can't ever happen again, because we put in these new regulations. But just like any beast, just because you put it in a new dress or you package it up any different doesn't make it a new beast or different or nicer or sweeter. So if you're asking me, the point of all this is, my point in 2020 is the age of reducing my debt as fast as possible, because the market may not completely be trashed by this year or by the end of next year, but when our debt becomes too much to handle and businesses can't hire anymore and can't increase salaries like they're used to, you don't want to be holding the bag of debt. We need to think about ways to reduce our obligations as fast as possible. For example, I've started renting out my car out on Turo. I could do a whole review on Turo, but basically the long run of the story is I've started renting out my car on Turo, and that extra income I've been using to pay down debts. Any debts that I feel, deserve to be paid down much faster. Right now, since my student loans, there's no interest on my student loans until the end of the year, or if they extend it again, I am paying double, triple sometimes what my original student loan payments are. Maybe, 4 times the amount. I am looking to reduce the principal balance as much as possible. And even when payments, interests come back and I have to start paying interest again, I will still look to pay off as fast as possible, because when I can free up my payments from my student loans, a car loan payment you may have, or any other debt, then I could take that extra money, then I could go buy some more real estate, I can go buy some more stocks, I could go buy into a business, because now I'm freeing up 5, 6, 7, 700, 800, whatever your amount is, you're freeing that up because it is now being paid to another business or, a bank or whatever the obligation is. You're freeing up tons of money. So pay off debt as soon as possible. You'll have more cash flow and be able to buy assets. As Patrick Betdavid says about his rules of money, he wants you to know that money's a game and that it's a game of doubles. You need to figure out, how do I turn $1,000 into $2,000? How do I turn 2,000 into 4, 4 into 8, 8 into 16? And if you keep doing that and get bigger and bigger with your doubles, you'll get to $1 million. You get to, you'll get to 2 million, and it goes just like that. But you can't. It is tougher to play doubles with $100 extra a month because you're paying all these other payments. So let's make sure we have tight budgets. I don't recommend living off ramen noodles, unless you're in college, then, that's really the only thing you can do. I remember those days. But figure out clever ways to earn either more income and reduce that debt, or not spend as much. Let's not go out every single weekend, or let's maybe drink at home. You get a good buzz at home, take Uber downtown, and then you're all set. But as soon as we free up our wallets, free up our cash flow, then we could buy into real estate, businesses, stocks, artwork, etc. And now you can really build that wealth. So that is my message today on the stock market. That's my message on budgets and how I view the economy. So let's shift the topic a little bit and let's talk about the stock market this September. If you're investing in the stock market this month, it's been very tough. It's been tough on me. We've had nothing but massive sell-offs all month. Leading it all is the tech sector. So anything that must go up must come down. As you guys know, I truly believe that the lack of good COVID-19 news, on top of being an election year and companies looking to take profit, has caused this massive sell-off. What I have done with my portfolio is trim some of the so-called fat and pull out of some of my heavy positions. I was very heavy on Tesla, Apple, because I love those products. I have tons of Apple products. So I love those companies. I love Google. I love I love the tech because I'm a techie guy. I love having the new latest tech. I actually bought the new Apple Watch SE, and I'll talk about that later. But I just love tech. I love it. I love it. I love it. But I realized that my portfolio was very vulnerable. It was very ready for this month, honestly. I obviously, my portfolio is diverse into other places, but what I decided to do is I decided to trim the fat and said, hey, I'm going to sell some Tesla stock. I'm going to sell some of my Apple stock. Not the whole amount, just some of it. And then I'm going to buy some more Lowe's, Home Depot, Walmart, some of these other some of these other sectors. Walmart obviously is looking to try to gain some more tech, but Lowe's, Home Depot, I really moved up my position on those companies and just looking to try to diversify. Again, I only buy stocks and things of companies that I love and companies that I actually know. If I look at the company and I don't know the name, I am not probably going to invest it. It makes it easier for me to sell if something bad happens. I'm like, oh no, this company that I speculated on isn't doing too well. Let me get rid of it. Or, and then 2 days later, that stock goes up. So I only buy into companies that I view are great, sound companies. And I want to limit, and I'm continuing to limit my exposure to these companies. So what we need to have a look at is how do we diversify in a way that makes the most sense. And as you can see, I have a lot of diversity in some real estate REITs and all types of other things, even energy. Duke Energy is one of the big holdings of mine. So I look to diversify in many different ways. So the market's been bad, but it truly, what goes up must come down. I think due to the fact that we had such a high August, it was just bound to have some sell-offs and people decided to take profits, which is completely understandable. And this gives, I think, new investors, if you have not invested in the market, I think this gives you an opportunity to buy into the market because, I'd say values are a little lower, but values are still a little high in some aspects. But do your research on the company, look at their balance sheet, really get a good insight on the company. But make sure you love the company. Make sure this is something that you can believe in as a company or a company that you see. And that's going to last for not just 2 years, but 5, 10, 15, 20 years. And I'm going to reiterate that constantly throughout the podcast and throughout, everything. So moving on, Apple held its event on Tuesday, September 15th, unveiling the new Apple Watches, the Series 6 and the Series SE. They've also unveiled the new iPad Air, redesigned. It's pretty similar, in my opinion, to the iPad. Well, it's very similar to the iPad Pro. It's basically just a budget iPad Pro. They also revealed their 8th generation iPad. So ultimately, this event wasn't as exciting as people wanted it to be. Typically, in September, Apple would reveal a new iPhone, and obviously they didn't. 2020 is weird. This is just a weird 2020. But Apple did say they're holding another event in October, and this will be revealing the 2020 iPhone. So they're having an event specifically just for the iPhones, and this should be showing off the new redesign that's similar to the iPhone 4 square edge design. So you'll be seeing the large iPhone 11 Pro size phones with iPhone 4 edges. But Apple is looking to compete in different ways this time. Typically, we'll see an Apple event and they'll just show off their new three iPhones. There'll be the Pros. One's a small Pro, a big Pro, and then there'll be kind of the XR budget version one. But this time, Apple is really trying to get into that budget realm. We saw with the iPhone SE being around $400. Apple's really looking to drop more iPhones, but all at different price points. Each, with different, obviously with your own, with one's going to be better than the other one, just so you don't butcher sales of certain iPhones. But to kind of get people who are still on their iPhone 6, I saw a video of Tom Brady still rocking his iPhone 6. So there's a lot of people that still rocking iPhone 6, which I can't believe iOS is even supporting the iPhone 6. But they're just looking to find ways of how do I get rid of you? How do I get people to get rid of that iPhone 6, 7, 8 and get a new iPhone? Well, if price was their issue, here's a more budget one. Now it's more advanced. The price is similar to what you bought your old iPhone for. And then for the people who are techie and nerdy, here's an iPhone with great processor, much quicker, and all that. So, Apple, I don't think is going to wow anyone with the new iPhones. I think a lot of the information has already been leaked. I think people are just gonna be like, yes, finally there's a new iPhone, and that's what's gonna be happy. I don't advise to be like, oh, Apple's event's in October, I should invest in Apple now and wait for that event. So then people, after the iPhone drop, buy up the stock and hype, and then I'll dump it. Basically, aka a pump or dump. That's not a good scheme. Ultimately, that scheme only works for large companies, and I'm sorry, it always hurts the little guys. Even when you think, oh, I bought it at this price and then now I'm selling it for a little higher, it truly always hurts the little guys. Please don't advise. If you don't like Apple already, do not invest in Apple. So that's gonna be my two-piece on Apple. I feel as though I talk about Apple and Tesla a lot, so I'm gonna make that short and simple. I'm gonna talk about Tesla now. Tesla is aiming to be the best manufacturer on earth, says Elon Musk. So Tesla had Battery Day on Tuesday, and Tesla ultimately revealed that their goal is to cut investment required by 75%. The overall impact in battery cells to be the battery cell cost by 18%. Tesla's plan to add an additional 100 gigawatts of internal battery capacity by 2022, and then 3 terawatt hours, which is 3,000 gigawatt hours, I had to look that up, of internal battery capacity by 2030. So they're really stepping up their game. But they're doing this by reducing the cost of how to build a battery. So ultimately, Tesla in the whole Battery Day, if you had watched it or if you did not, this is kind of their goal. The goal is it takes typically $100+ per kilowatt. Tesla reintroduced a new battery cell, and a bunch of other changes to their makeup. I don't want to get too technical and too nerd out, but basically they're saying that they're going to reduce the consumption to 56%. So bringing it down around $50 per kilowatt hour to get the batteries, which would be huge, because then now the cost of a electric vehicle is similar and comparable to an ICE vehicle. And Tesla also said that they're gonna, in the next 2 to 3 years, that they're gonna drop out a $25,000 vehicle, which would make the company very profitable. What do I think about all this? I think Tesla's Battery Day was a little disappointing and a little exciting at the same time. Ultimately, I'm not a battery nerd, so I couldn't say I understood everything, but on a investor type deal in the long run, I thought it was great. In the short term, it was really boring. Nothing new exciting is going to happen. So for the short term investors, they're like, this Battery Day sucked. For the long term investors like me, this was fantastic, because they basically said, hey, we're going to drop costs by so much. We're going to be so more efficient on all our factories. We're going to have factories, instead of, doing the work of one factory, this factory is going to now do the work of 2 or 3, and we're just going to get more and more and more efficient. They also talked about putting factories in as many continents as possible to reduce, the shipping and all that. So basically, you can see in a few years, once they have all these factories like Berlin, the one in Hong Kong, which is up, but they're actually adding on to it, Fremont, and the Texas factory. Now you're seeing 4 factories. If they each do, say, 500,000 to, say, 1,000, if they do 500,000 to 1 million, you're looking at 2 to 4 million cars being produced. And that's going to really be competitive. And now they're really competing with Toyota and Mercedes because they're really pushing out their cars now. And as before, I think Tesla's biggest issue was just making the car. And Elon knew this up front, and a lot of companies knew this up front. So that's going to be my last piece. Thank you for listening to today's episode. I really appreciate you guys. If you don't mind, if you could follow me on Instagram and Twitter, it's Sean_Johnny12. DM me if you have any questions about anything, about the market, about real estate. Please let me know what you guys think. Other than that, guys, have a great rest of your day. Bye.